Thanks everyone for joining us on our first community call of 2022. We're so glad to have you here, and seeing mostly familiar faces here, of course, but maybe Marshall, we haven't met yet. I know you've spoken with Kate, but it's good to have you. And a little introduction to us. I mean, my name is Channing Saliva, and I'm one of the co-founders here at Brand Pollinators, and we help build purpose-driven brands through strategic advising as well as tactical marketing support. And Kate Fossen, my co-founder, we launched this series of community calls last year as a way to address some common issues that many of our co-founders and our founders were facing. And we had some fantastic guests last year. We talked about SEO, we talked about purpose-driven PR, B Corps, and many other really relevant topics. And this year will be no different. We've got quite a list of guests and experts slotted in for this year, and we're excited to roll those out as we progress. And in today's call, we're talking about a hyper-relevant topic, which is crowdfunding. We ran a couple polls and surveyed some of the founders in our communities, and this was a key topic that many people wanted to learn more about. And I think although crowdfunding has grown in popularity, many people have run their own campaigns, or maybe they've donated to some, or they're planning on launching one this year, there's still this level of uncertainty and confusion around crowdfunding. And that's exactly why we're here today. So we're joined by a fantastic guest, and our hope is to discuss the basics of crowdfunding and best practices and some potential hurdles that you might encounter. But before we dive into today's call, I'll hand it over to Kate Fossen so she can get us started.
Yeah, for sure. So we are excited to have Dan Kurzrock here today from Regrained. Dan actually founded Regrained and was a co-founder at the Upcycled Food Association. And Regrained is a certified public benefit corporation and a 1% for the Planet member. They use patented technology to rescue healthy food and upcycle it into better for you ingredients and products. So Dan has run really successful crowdfunding campaigns, raising over $1.5 million in total. And he has agreed to share some insights with us today. And so, yeah, if you have any questions throughout, please, raise your hand, chime in, add something to the chat, and we'll make sure that we can get those answered for you. We want this to be, really helpful for you as you're considering crowdfunding for your brand. So please share if you have any comments or questions. So Dan, thanks so much for being here.
Yeah, thanks for having me. Love this community you guys are putting together, and so relevant to all the things I care about. So it's good to be with you guys, and those of you listening later. Thanks for tuning in.
Yeah, thank you. And so to start, can you just tell us, why did you choose crowdfunding as a route, and what was your goal there?
Yeah, great question. I mean, so what we're building with Regrained is pretty non-traditional in a lot of ways, and reflects our values. I think, like probably a lot of the companies in this call. And so not all businesses need to raise money to grow, but many do. And where you choose to raise your money from can have a really big influence actually on the rest of the strategy that follows. On one side of the equation, traditional venture capital can be a great source for high growth businesses that are looking to have an exit within a pretty particularly defined time frame. Some businesses, maybe you can fund it with your cash flow or get debt. And in our case, we're building a business. Our whole goal is to support the what's now become kind of known as this upcycled food economy. So we were really early to this. Started this as actually a side hustle in college, and even back then identified the vision of, hey, we want to create ingredients like the ones that we can make from the grain from breweries, and turn them into ingredients that other food companies can use to create product innovations. And to do that, we needed to develop some technology. We needed to build some plants. So we needed outside capital in order to actually fund what we were doing. Became also very passionate about just kind of a lot of different names for, like conscious capitalism or stakeholder capitalism or whatnot. The way we saw it is like, we wanted to find a way to align the value chain, what we were trying to do, everything from the supply chain all the way through to the end customer. And so for us, we always saw, crowdfunding as one piece of how we've raised money. It's part of a capital stack. I think that's really important to clarify. So we haven't solely funded the business with different types of crowdfunding, but it's been an important part of the strategy. And it's a part that enables us to kind of grow a community around what we're doing and really democratize the ownership of the business. So to dive a little deeper, and I think we're going to, I'm sure we'll go in depth into all this. We've done a few different types of crowdfunding historically. The one that a lot of people think of is the Kickstarter model of rewards-based crowdfunding, where really you're creating a sales campaign and you're just pre-selling your product. That is not really what we're going to be talking about today. There's a lot of resources out there. It's a great way to get a new product to market, with some revenue, but it's not really investment in the business. What we've done twice now is what's called equity crowdfunding, and there's we've done it on two different platforms, and it enabled us to actually have non-accredited investors, so everyday people, doesn't matter what their net worth is, invest as little as $100 in the business. First campaign, we set the minimum at 100. Second campaign, we raised it to 250, and we had the full range of investments from $100 to $100,000 from someone that we'd never met before, as a business. And there's a lot that goes into, pulling these campaigns off. But when you do it, what it means is we've actually got over 1,000 owners in the business, which might sound like a governance headache, and we can talk about that too. But it also means that we have over 1,000 people, like a small army of folks that are out there that are literally own our mission and our success with us. And so, we often tap into them with product launches or with, questions, or there's, a lot of ways to activate that. And so we see it really as a strategic capital for a few reasons. One is that it, enables us, as we mentioned, to actually tap into a customer base and have them actually be, owners in the business. Two, it's really in line with our mission of, that's, I don't need to talk about too much on this call because we're all mission-driven businesses, right? As a B Corp, to have that democratized, representation, ownership structure. And then another is that, by pooling a lot of different investors, you're also spreading out the size of ownership of each of those investors too. So there's not, specific investors that own an outsized percentage of the business. And from a governance perspective, it enables you to be a little more patient potentially in how you're building the business. You want to be really upfront with things like that. And when you're raising a campaign, what your goals are with the business and how you intend to produce return for the investors. And then once, they're in, they're it's not like you're collecting a vote, from each of these investors too. So it's dilute. I talk about it as almost like a non-dilutive from a governance perspective. It's obviously dilutive from your ownership in the business, but it's enables you to actually retain as a purpose-led founder, more control over, over your board and whatnot. So yeah, a lot that goes into all that. I'm a founder like all you, so I tend to talk a lot. So I'll pause there, but that's a little bit as to why we approached equity crowdfunding. The timing was right too. Their first campaign was in 2018. And that was, right around when the regulation CF, which is regulation crowdfunding, the non-accredited investor. There's a lot of jargon with this stuff too. So guys, please jargon police me so I can make sure that I'm not creating confusion. When that became possible. And yeah, happy to go into depth into all this. I think it's a really important part of the future of funding, especially for mission-driven businesses. And I've made it part of my kind of just side mission to just educate founders about it, because I think it's too often overlooked.
Yeah, that's so interesting. I mean, you covered a lot already, but in terms of like the marketing piece, so I'm curious about how much do you promote this? Where do you, share that you're raising funds like equity crowdfunding in order to capture the right kind of people that you want to bringing into your company really as owners. And then, yeah, just like how you're sharing that like educational piece as well when you're promoting that.
Yeah, for sure. So first of all, I really encourage this to be a part of a larger capital stack. So come up with a whole fundraising strategy, of which this is a piece. The way we always saw it was the more successful we were with the equity crowdfunding piece, the less angel investment or venture capital, we'd have to raise. And also by thinking about it like that, we were able to produce, more with the effort of going in, of actually putting the offering together, because you have to go through that anyways, no matter which investors you're talking to. And so I think it's really important to give yourself time, right? And to be patient with this, because for these campaigns to be successful, you want to actually have as much money in the bank, so to speak, that's actually committed to the campaign before it becomes available to the public. So you can test the waters with private campaigns, and that is a really, really critical piece of doing this. And in that phase, that's where you start. Ideally, you've already, you've started to develop a network, or connections to kind of angel investors, micro angels. What this does is it makes it practical for folks who maybe want to invest in the business but can't make a $10,000 minimum check or $20,000 minimum check. If they only want to invest $1,000, that's fine. And so start, in your prep work, you can start cultivating these relationships, and then like host a webinar, or something like that, where you do the pitch and answer questions, and then they get access to all the diligence documents. It's basically a investor diligence room, that portal, and start following up with them, privately too, so that they commit to the campaign basically before it goes public, because the kind of the optics on that are a really important part of when new eyes come in. And the way that I like to that we thought about it is like concentric circles of releases. So starting with an inner circle, really high touch group, where we thought that these are people that would at least write $1,000 checks and up, and then you can extend to maybe your customer list, right? So still keep it private, but if you're a consumer brand and you've got an email list, so I'm not talking about don't post it on social media at this stage. This is plain. You can just do a plain text email, from the founder to your customer saying, hey, this is something that we're doing, and we want you to take a first look at it. And you kind of can keep expanding, out from there. Ideally, in that phase too, if you can get in front of like angel groups. So there's actually now, like we did one called Angels and Entrepreneurs. It's an online group of investors that invest in equity crowdfunding campaigns. And so it's a leveraged opportunity. So if you can give a presentation that then reaches this broader audience, that can really move the needle in a material way too. So maybe you've got a pitch competition coming up for slow food, or one of the expos or something, and then at that pitch you can say, hey, we've actually got this equity crowdfunding campaign live. If you believe in what we're doing, you can actually invest. And ideally, what you'll do is you'll release it to the you'll make it public after you're at a certain threshold that you've already put in there, that shows the validation that other investors have looked at this, they've vetted it. And at that point, it kind of creates a flywheel, and people to come in and they see other people are investing, they get a little bit of fear of missing out, and kind of the new traffic is more likely to convert, just like you can think of it like a marketing campaign in that respect. But doing that legwork up front to test the waters, refine your pitch, and basically have an online portal through which you're collecting the investments that you're kind of going out and hunting for. That's what you need to do before the kind of the farming side of it is able to start producing results.
Yeah.
I don't know if that makes sense.
So if somebody is, building a brand and they don't have a huge audience, can they still make crowdfunding work? Or do you really need to have a certain amount of insider followers before you can really make it work?
You need to be able to demonstrate credibility. And that doesn't necessarily mean that you're established and you have customers. Maybe you're a founder that's done a business before. Maybe that means that you've done a lot of legwork as a B2B, like we're mostly a B2B business, too. So, we talked a lot about our, the partnerships that we had set up, or maybe there's technology that has, patent protection or something like that. And so, the most important thing is that you need to be able to show like the reasons to believe, for an investor. If you don't have a huge customer list, it's just going to be that much more work to get the campaign to a place before you want to open it up to the public. But then, it's also an opportunity to build that customer, that customers. Those will be then if you don't have customers yet, those will be your first customers. But I generally think this is better for businesses that have been in operation for a little bit of time, there's enough like reasons to believe, for an investor on there. You've got to be able to tell a story. And it doesn't need to be a revenue story. Like our financial results were very early stage when we therefore like lacking, right? It's not like we were a huge business from a revenue perspective when we did this, but we waited until we were at a point where we could speak, demonstrate kind of viability in a few other ways. Credibility.
Jenny, do we have any questions here? It looks like there may be something.
Yeah, I see one about best crowdfunding platforms. My answer to that is that it's kind of like deciding what gym to join in some respects. Like you still have to put in the work, right, to get the results. Now that said, the native audience on these platforms, does matter. We've had great experience with WeFunder. WeFunder's the most crowdfunding dollars. This is public information. Is like equity crowdfunding is raised on WeFunder. They do have a lot of food and beverage businesses that have been successful there, and that becomes material if your campaign starts to accelerate, and you can get them to maybe it's an algorithm. You can get featured on their homepages and things like that, and that can the native audience can really matter there. I would avoid super kind of niche ones that are out there. Like I don't know the full how many of these platforms are out there at this point, but the leading few are WeFunder, Republic, I believe Start Engine, and then there's some where you can do only accredited investors, as well. So like AgFunder has one of those. With WeFunder, what we did is set up a parallel raise, so accredited investors and non-accredited investors could invest at the same time, and that there's some nuance there. So that's something that we could dive into if it's interesting to you guys. It's called Reg D and Reg CF, and you can raise them both on the same campaign, on equity crowdfunding, and expand your reach. But yeah, I personally love WeFunder. The team there is great, and they've been on the forefront of a lot of the regulatory landscape too, and helping the SEC and whatnot really understand and shape what this kind of new model for venture financing can be.
And we do have one other question from Javion. Dan, you mentioned that it is helpful to have an existing following of customers. Javion's question was, do you think it helped launch an unknown product into market by having more involvement of the funders on the platform? And then Javion, if you want to expand on that, feel free to chime in on your question there.
Thank you. Appreciate that, Jenny. Now, I was just asking because, like getting the audience can be one thing, but also like a big part, I feel like, of these platforms is helping you to get your product out there. And since you're like, your product was pretty much unknown, or not really unknown, but like unusual, like different. So do you think that kind of like helped people to buy into your product because they were able to fund you in a sense? Did you see an uptick in more?
Yeah, I definitely think that's the case. But it's actually if it's a totally new and unknown product, I think doing a rewards-based crowdfunding campaign to launch the product in the first place is a better way, because then it's more directly tied to the product itself. And then that can become your core upon which, who you go to, your inner circle for who you go to first when you do equity crowdfunding campaign. So if it's a totally new concept, totally new product, not in market, not in distribution, rewards-based crowdfunding is like a first step. And you can do all this inside of a year. You could spend a quarter, doing the rewards-based crowdfunding, get your product launched, and then, by several months later, you might be ready to launch an equity crowdfunding, campaign, building off of that.
All right, and those are all the questions so far. So Kate, I'll let you take it over from here.
Oh yeah. So in terms of like when you're setting up a crowdfunding campaign, how do you go about selecting what that goal is going to be in terms of your target amount that you're trying to raise, or even
Yeah.
what the minimums are?
Yeah, so you want to have like a minimum goal and then a reach, like an actual internal goal. So I guess maybe like a public goal and a private goal is the way to
Mm-hmm.
think about it. The private goal you want to, should be, I mean, depending on your business, unless you like really don't need a lot of capital, it should just probably be the maximum of whatever you can raise. Ideally, you want to get as close to that as possible, right? Nothing, nothing wrong with oversubscribing, but oversubscribing around is generally not a horrible thing for an early stage founder. On the public facing side, you want to pick a target that is tied to certain capital expenditures, right? That is reasonable. So like maybe it's a few $100,000 because you want to, you need to start up with a new co-packer and order packaging and, make a few key hires or something like that. And then, that lower amount, that's where the percentage funded is going to be counted against. So as money comes in, it'll create that, the optics of this being a really successful campaign. And so you want to have a public target that it's a little bit of an art, right? That's large enough that it's, reasonably tied to what you actually need to do for your business, but that is maybe a smaller chunk relative to what you would actually hope to raise. Because then once you've got like, maybe it's more than 50% raised, that's when things start to accelerate and pile on, if that makes sense. So yeah, I would encourage you to think about a private goal and a public goal. And it's, I would say, probably more art than science as to how you split that up.
Would you say it's the same for like the length of time that you would run the campaign? Is that based on kind of the traction you're getting, or?
Yeah, and we actually extended both of our campaigns. Well, you can do a rolling close, I guess is the most important piece to share with this. So you can say, hey, we've hit our minimum. Let's take this money out and start putting it to work. But there's still, every time I refresh the page or every day, there's more investment in there. So there's no reason not to leave it open for another month and kind of see where we're at then.
Mm-hmm.
So yeah, I think doing a rolling close is a really strategic way to approach thinking about the timing.
Well, you mentioned something interesting as like pulling some money from it when you get to a certain point. So just logistically, how does that work about receiving the money that you're due from investments? Like how long does that take, or what does that look like?
Yeah, it depends actually on how the platform is operating. So I can speak to WeFunder, the way that they do it. So some investors, will actually like make the investment and their money is just held in escrow, until the campaign closes. And so you can only obviously extract money from funders that have, you've hit, and you can only do this once you've hit your public goal, of course. And then you get the money via wire transfer from the platform. So now there
You
is
like hit the ground running then once the campaign has released it.
Yeah, and once once the campaign ends, there is a closing period where the money, anything that's in escrow, that's really fast. But sometimes there's investors that maybe they checked a box wrong on something, or they indicated that they were going to be sending a check as opposed to they can actually do that, like they can pay by check as opposed to doing a wire transfer. And so there's kind of a period of, I guess, reconciliation, when the campaign actually closes. But for the rolling close, typically there's enough in there where you should be able to, if that's the strategy that you're going to do, that you can pull some out if that's relevant for what you're trying to do as a business.
Mm-hmm. Yeah, and I know one thing you've talked a lot about too is like engaging with people once the campaign is over. So now these people are, basically part of your company and they have a vested interest. So what are kind of some of the ways that you engage with people who have participated as funders?
The first thing that we did was set up a email campaign drip, again, all plain text. So it wasn't really focused on like highly designed graphics, for this. It was about, because these people are, it's emotional for them too, to be investing in a company and to be connected to the founder. And so, did a lot of plain text communication that was signed, by me as founder CEO. And there was a welcome series, that they would receive. So, every few days would upload the new investors, and they'd, get plugged into this kind of series of emails. The first one thanks them, welcomes them to it, and then shares a few asks actually to them to start getting them engaged. So it's, hey, we'd love to hear from you, like, why you invested, and actually be really helpful if you could think of 3 friends, five friends, 5 people, send this to 5 people that you think would also be excited by it. And here's a discount for our e-commerce store in case you can't wait for the campaign to end to try our products, that sort of thing. And had a series of emails that you'd have to do some work up front to set up the flow, but then once you start uploading the context into that, it becomes pretty automated. And then on WeFunder, there's an updates tab where you can, almost like a blog where you can share what's happening with the business. So a few times a week, tried to post in there with some different things that were happening with the business, which again, the investors get an email when they see that, and then the new investors, also if you get some press or anything like that, it's a good place to to put it in there. And so we started engaging the investors on the second campaign. We weren't as sophisticated the first time around, but the second time around, we started engaging them, within a day or two after they invested.
Now, I know you've been really successful with this, but I'm sure that you've also encountered some challenges. So what happens if you don't meet your goal, or you're not getting a lot of engagement from the people who have invested, or they're not sharing, and they're not coming back for other campaigns? What have you experienced any of those kind of setbacks, and do you have any advice for people who might have tried a crowdfunding campaign before and didn't have a lot of success?
I think it's one of those things where more is more. You can't be doing too much to to promote this.
Mm-hmm.
And if you're having trouble getting engagement on the campaign, maybe there's something on the offering page that's not enough. So one of the things that we did as an example was we tried to anticipate as many of the questions that we would get from investors as possible, even looking at our own financial performance as if we were an investor, and proactively addressing some of the questions that people might have there. And then with that kind of earlier test the waters group, one of our goals was to actually pressure test our frequently asked questions too, because the more that you can get the information on the page itself, the less actual admin work you have to do on your end to to run the campaign. And so anytime we got a question that was new from an investor, we then would write out the textbook version of the answer and post it on the FAQ. And so it was a living, we made the page very much you can't change any of the material parts of the offering, right? There's regulatory, and so you can't change your valuation, you can't change, there's things that you can't change, but in terms of how you're marketing and framing, you have, at least on WeFunder, you have living access to the page, and so you can be improving it. And so I just think persistence and endurance, just like being an entrepreneur in general, applies here, and holding everything that you're doing subject to improvement. We didn't see, an example of something we tried that didn't really work is we didn't actually see a lot of results from using Instagram and Facebook to market this. Some campaigns will do paid advertising to try and bring new investors in. Or the limit of what we found to be successful is doing the paid promotion so that we actually reach our actual audience. On Instagram and Facebook, you actually have to pay them so that the people who've already said that they'll follow you see what you're posting. That's really awesome, right, for all of us. So that's worth doing, right, because these people have already indicated engagement with what you're doing. You want them to see about it. But we found email and channels like LinkedIn, for example, to be much more successful than Instagram in promoting this. And so it's just test, learn, adjust, repeat, and keep going at it. And if there's really doesn't seem like it's working, and it becomes a time sink, right? It's important to not let the sunk cost fallacy rule us as founders, right? And know when to kind of cut and run. It's really hard because generally we're all pretty stubborn too, or we wouldn't be doing what we're doing. But the worst that's going to happen is that, I guess maybe you wasted some time and maybe there's some optics, right? But it's not like, you can remove the page from it being listed. You don't have to talk about it from there. I don't think it's going to create long-term reputational, risk for your business that you weren't successful at doing it. I see it as mostly all upside, even if, again, I've had some like personal, friends or, peers, in the industry that have, gone and done equity crowdfunding, and they raised, maybe like 300,000 instead of like 600 or 700. And I'm sure they would have loved to raise 600 or 700, but that still was, capital that, reduces the strain on the rest of the round. And, I think they would say that they thought it was worthwhile.
Yeah, for sure. I mean, it's definitely that balance of like, you kind of get what you put into it too. And I think a lot of times people start a crowdfunding campaign without, like you mentioned, having a budget ahead of time, without really thinking about what those inputs are going to be in order to make it successful. And then when you don't get a lot of response from it, it's kind of like, oh, well, that doesn't work. But there's a lot that goes into it ahead of time. And I think I've seen some really good like videos that people include. Do you think that video is like something that's definitely a piece to include?
I think it's a piece to not overthink. So the video, what we did, the extent of our video was, and actually WeFunder's done a study, on this, and they found that the production value of the video has absolutely no correlation with the success of the campaign.
Oh, very cool.
So we invested in an actual professional like videographer, but it was just me talking really in front of a camera with good lighting and a good microphone and a little bit of editing to clean it up and tighten up the time frame. Like really did not place enormous emphasis on the video itself. I think what can be helpful is throughout the campaign recording videos with like doing like a webinar with, maybe like your lead investor for the round. You need to have a lead investor for these rounds, asking you questions, almost like a podcast, style, things like that, I think can make a difference. But, having this like incredibly produced, Oscar worthy video is not more likely to make you have a successful campaign. The work is better spent putting into getting like a good lead investor up front that you can say set the terms, which is actually something we haven't talked about yet. So to dive into that quickly, because it's actually pretty important, is our second campaign, what we did is we had a lead investor who was more of an institutional investor, strategic investor in our case. It was a large brewery that had invested, and then we could say, hey, you're investing on essentially the same terms as our lead investor, which gives another level of credibility. So I should have thought of that when we were talking earlier about if you don't have a big customer base or anything like that. If you can get a lead investor, it can be an angel that's got like ideally industry experience in your realm, or maybe a VC or a strategic partner, that you can say, hey, this, these terms were set by this lead investor. That gives another layer of credibility and trust too, that would much rather see you put effort into getting a good lead investor that you can tell that story around than producing an epic video.
Yeah, that's a great point. Do we have any other questions? Anything in the chat, or anybody have a question that they've thought of that they wanted to ask Dan?
Let's see, I've got some questions here. So I'm curious, Dan, what does the back end of the portal look like? Are you able to see, I'm really curious about kind of the demographics, psychographics of your investors. And I imagine they'll probably vary pretty drastically between an equity raise and then a rewards-based raise, but I'd love to hear your thoughts on that.
Yeah, it's one of those things that I wish we had spent more time actually analyzing. That, it's a really good idea to like send out a survey and we did it once, and I don't have it on the tip of my tongue as to who these people were. One thing that I think that's interesting to share is as the campaigns went on, one of the things that we were looking at is how many of these people were on our lists to begin with, versus were new investors, and the majority of our investors in both of our equity crowdfunding campaigns were people that we didn't necessarily know before. Maybe most of the earlier stuff came from folks that were 1 degree away, but then it started to expand from there, which is what you'd intuitively hope is going to happen. On the back end, and we were constantly refreshing it, you can see what people, where your campaign's at, from a performance standpoint. It doesn't give you, and there might be privacy reasons for this. It's not like the portals are giving you, hey, this is a 25 to 35-year-old living in, Seattle, Washington, with a median income of whatever. So that's not data that's just provided to you. But it would be interesting to go back, at the end of the campaign and get a sense of that. But I don't have a great.
Yeah, so it's really interesting. So you mentioned a lot of the investors are new to the brand. So are you finding that these platforms is a place of discovery? Are people just browsing these platforms looking for companies to invest in, or how did they find your company?
Yeah, they are. But I think the most important part of that is that by the time they found us, there was already enough people that had found the campaign, so that it wasn't. So it's like discovery, but there's a big like follower psychology, I think, with it too. Of, hey, this is hot, right? Like, you want to be seen as trending, for that to work. But then there is definitely an audience of people who are in there, because a lot of these investors in there, I mean, they want, they hope for financial return, but it's not like this is their entire investment, portfolio strategy, right? A lot of them are on these platforms because it's kind of a fun experiment for them, and is, I think has as much like emotional connection, to a lot of these investors as it does, the financial outcome, which, of course they're looking for. They wouldn't be making an investment. And so, there are definitely folks on there. If you look at it like in WeFunder, you can click in to see the investor and you can see their investments actually, and so, a lot of them you'll see have made like, dozen investments on the crowdfunding, campaign. And, I think that's, those are the folks that you want to be making your campaign as attractive to the first time they see it, right? Or maybe they follow, sometimes you'll notice too I don't know how all of them work, but on WeFunder, they can follow your campaign too. So you can see how your investor count, correlates with your, or compares against rather your follow, who's following your campaign. So you can be like, oh, there's 1,000 people following this campaign, 600 invested. How do I engage, those other 400? Maybe we need to like send out do another webinar. I know I keep using that as an example, but like coming up with strategies to like get them to spend a little bit more time with you and be pushed over the edge, because the actual transaction itself for them can be really fast. And they can invest in minutes, just like an e-commerce transaction. So, if you can create the opportunity to make that conversion happen, it could be really powerful.
Yeah, absolutely. I mean, that's so fascinating that you can see the other investments that those larger investors make. And I'm curious if, once they've bought into your company, what opportunities for collaboration are there with those other companies that they've invested in? Have you guys tapped into any of those at all?
Yeah, that's a good question. Not in the way that you're asking, although we do ask our investors, because we're an ingredient company. We're trying to help other companies that are food companies that want to make products that use upcycled ingredients, or maybe just healthier products that happen to be upcycled, or better tasting products that happen to be upcycled, whatever the reason is. We're always looking for other food businesses that we can create products with. And we ask our investors to make referrals, and that there's definitely been a steady stream of referrals that have come from that, but not specifically like other companies that they've also invested in on equity crowdfunding. So yeah, that's an interesting question. But it's, there's we have certain investors that we didn't know before this crowdfunding campaign that have become relevant advisors to the business too. So a lot of times that's a good reason to do the marketing drip that I was talking about, where they're getting plain text emails from you, because a lot of them will reply to it and say, hey, I've been in the industry for 30 years, love what you're doing, this is my background. And then if you feel it's relevant, you can set up some time to talk with them, let them know, a little bit more, what's under the hood, and they can make, introductions from there. And in our case, some of those folks started with, maybe small investments, and then ended up like following on with additional investment later.
Fascinating. And with your campaign, I mean, what's that level of engagement look like afterwards? And did you see an increase in sales now that more people were aware of your product?
Yeah, yes and yes. For us, we're kind of a weird business in that we had we had this kind of split focus with consumer products that we're distributing to retail and through e-commerce, but with what we're actually trying to do, which is scale through industrial ingredient sales. Be interesting to ask that question to a brand that's more purely focused on scaling their consumer sales or retail sales. But we definitely saw engagement and an uptick from there. We're not like inundated every month with dozens of one-off questions from $100 investors that are creating, challenges for us. There's occasionally one, here or there. And then, over time, just some of the investors end up being the ones that I talked about, before, that they had some strategic relevance to what we're doing, and we've chosen to, to engage them more or less than the others. Yeah, I mean, it's something that we're also just like constantly trying to figure out, better, because it's such a new concept to have this like legion of, investors that you can tap into for different things. And so, there's a lot of kind of open opportunity to try to do more of what we've been doing that works, but try new things too, and see what we can do better.
Marshall made a comment about Elliot from Tig Brands just did a podcast with Johnny Price from WeFounder.
Yeah.
So I'll share
Two great people.
Yeah, I'll share the link in here in case anybody wants to follow that up. But yeah, there's definitely, there's a lot of ins and outs for people that haven't, done much with equity crowdfunding before. So yeah, I know you shared an article earlier on to the Forbes article from last March about equity crowdfunding too. So we'll definitely make sure you follow up on those resources for the people who are here that are curious about more information about equity crowdfunding, because there's definitely a lot to learn there for sure. But like you were saying, it's evolving, and there's a lot of opportunities to do really interesting things. So have you?
Yeah,
oh, go ahead.
Oh, go ahead. I was just going to say, well, on the topic of WeFunder, Johnny Price is one of the first employees at WeFunder. We met. We were on a panel together, and worked closely on our campaign, and definitely like one of the leading experts on equity crowdfunding out there. So, and Elliot's the man too. So that's probably a great conversation between the two of them. But there was another point that I was going to make there, but it just escaped me. So sorry about that.
Oh no, that's okay. I was just thinking when we're talking about like opportunities for engaging with investors, have you seen anything interesting from people who've invested through your crowdfunding campaigns? Like, have they provided any like interesting feedback or given you any ideas for new products or anything like that?
Yeah, totally. And I remember what I was going to say. So at WeFunder, also on their site, there's a learning library. It's probably like below the fold somewhere, because they're mostly trying to get investors, but there's a whole it's like an encyclopedia of stuff about equity crowdfunding. So
awesome.
I recommend checking that out. Let's see. After our first campaign, we went through a rebrand, and we engaged our investors in that. We used it as like a consumer testing, basically like, hey, here's a few different directions that we're looking at, and got some feedback on that. When we've launched new products, we send them to the investors first with a code and an ask for reviews, or or even just private feedback. And as I mentioned earlier, like we're proactively asking for introductions, and a lot of times they're being made for us too. Like, hey, one of your investors, I'm connected to the founder of this company. They seem like they'd maybe be a good partner for you guys. What do you think? And so, as much as you can keep, and we do an okay job of this, I think, of like keeping Regrained top of mind for our equity crowdfunding investors, the more likely they are to open, emails where you're asking for help, or proactively, or better yet, to proactively think of ways that they can help what you're doing.
Mm-hmm. And how often are you using social media? I know you mentioned that it wasn't really super helpful in certain situations. So is that still like a valuable channel for you, or you specifically one channel over another?
Yeah, I mean, for us, because our focus is mostly B2B and working, selling ingredients and innovation services. And so LinkedIn is, we use that a lot. We do post on Instagram, and it's still relevant for the business, but we, much more active, I would say, on LinkedIn for the nature of our business.
And in terms of like following up with people, especially investors, what kind of reporting do you do for them? Like, how much effort is involved in providing updates about, funding or your company, that are relevant to those new investors?
Yeah, it can be cumbersome, and it can also be the fine line between, because there's so many investors, you don't necessarily know. You could have your competitors invest $100 in you, and then all of a sudden get access to whatever you're sending, everyone, right? So it's a balance between sharing enough and not sharing, too much, right? And so, there is an annual report that I think is a regulatory requirement that you do. But and this last year was a little tough for this. I actually just did one report that I sent out last week for the whole year. But typically, I try to every quarter to do this format that I call that I think is really good for early stage founders. I was like religious about it for a while. I did it almost every month, and then every quarter. I call this is inspired by a friend in the industry, Ashley, the founder of the Food Corridor. She calls them brags and groans, and so it's an email where it's much more of a narrative and it's you can share KPIs and things like that, but it's more about, hey, here's what's going well, and also here's what's not going well. And I actually found it to be very cathartic as a founder too, to go through the exercise of sharing both, to actually taking a moment to see the forest for the trees and sharing what's going well with the brags, and also, sharing what the groans were and what the learnings were from that. And then importantly, there's a third section of asks. So it's brags, groans, and asks, and come up with 2 to 5 asks, for the investors that they can help you with. And something like that, I think, would be a good way to approach it. It's also, I think, just a good habit to be in as a founder trying to cultivate a ecosystem of support around you.
Yeah, that makes a lot of sense. It's so important. We talk about, a lot of the companies that we work with are B Corps, or, looking to provide as much transparency as possible. So it's a good point that, a competitor could be, looking in behind the curtain whenever you share information like that. So,
it's almost like you're a public company after you do this. Not fully, of course, right? You're not publicly traded, but it's tricky. And we've had, there's been an investor that has tried to pressure, this person invested like $200, and every so often tries to pressure us for like a firm answer on when they're, when we're gonna like sell the company and produce return for them. And it's just like, you're going to get a few bad apples like that probably, with this campaign, but it nets out super positive.
Yeah. Well, that's good. I think I found this learning library you were talking about from WeFunder, the guide. So I'll share that link here in the chat as well. We can open it up for anybody. Does anybody have any questions that you'd like to ask Dan while we've got him here, our resident expert on crowdfunding? Let's see. Oh,
hi guys. I have a quick question. If it's is someone else talking?
Go ahead.
Oh, hey Dan, quick question. Sorry, I had to jump on kind of late, so I missed the first half. So if this is a duplicate, just shoot me down and I'll watch the recording. But I was just curious because you guys do have, and like, I guess you would consider it an omni-channel strategy. I mean, just as far as the fact that you have the ingredient side of your business, and then you do have some consumer side, like when you're doing your narrative with the crowdfunding, where did you find the most value of storytelling was? Like what element of your business seemed to resonate most with the investors?
Yeah, it's a really good question. We focused on the core vision, for the business and what we're looking to do as an ingredient business and technology business. So And then everything, and then the other pieces of it were part of the supporting narrative, but really focusing on the big picture of what we're accomplishing and what we see to be really the reason to invest, and the reason why the lead investor invested at the terms that they did, and and things like that. So yeah, for us, it was focusing on our B2B way more than on what we're doing with the consumer side, because for us, the consumer side is a bit more of a marketing tool for the B2B side.
It makes me wonder too, if there's like, if your customers aren't necessarily the people that are going to invest, and vice versa.
Yeah, I think any group though that you have a reason, that you see a reason for them to believe, is worth, like think of it as an and, right? So there's no reason not to hit up the customers. You might find that you're not going to get as much, you might not, for whatever reason, for your business, might not get as much conversion from your customer list, as opposed to, I don't know, maybe we even had like some of our some groups that like we were customers of, that were just like an account executive at a supplier, invested in the business, things like that. So you just never know what's gonna, more is more. It's like you want to get this, you want to be targeted, right? But yeah, the more eyes that you can get on your page that have some connection, to this, or earlier on, the better. And you got to be willing to follow up, a lot of times too, because it can take a lot of nudges to actually push people over the line.
Yeah, for sure. All marketing is like that, I suppose.
Yeah.
Okay. Any other questions for Dan before we wrap it up? No. Okay, well, we will have the recording available later if you need to review anything, and we'll send that out for people who haven't seen it yet. But are there any final thoughts from you, Dan, that you want to share?
Oh, I hope this was helpful. I know it's a confusing way to raise capital that's really misunderstood. And one thing I'll say too, is that your lawyers might caution against something like this, and a lot of times that's because it's because it's new, right? Lawyers don't really like things that are new, because their job is to see risk. Definitely listen to your lawyers and engage your lawyers, but to understand that this is so new that you might get people that are experts in other fields that are writing this off because they haven't taken the time to really dive into it. And I just want to assure you that like this is very real, and it's very promising, and there are businesses every day that are raising millions of dollars through equity crowdfunding. And I think that's really exciting, because it takes so much of the power of what gets funded right now is just this elite small group of very wealthy individuals or entities. And for a purpose-driven business to be able to tap into like community finance, basically, I just think it's even though it's like still kind of new, it's incredibly powerful, and it's working for a lot of businesses. So yeah, I hope this was helpful.
That's awesome. Well, thank you so much. I really appreciate you being here. And then what's a good way? Can people reach out to you on LinkedIn, or what's a good way for people to connect if they're interested?
Yeah, for sure. Any of the ways, I'm exceptionally easy to find. LinkedIn, I'm just Dan@regrain.com. I try to be good about responding, especially to other founders. It's and I hope you do the same when other founders reach out to you. It's all much better and good company.
That's awesome. Okay, well, thank you so much. I'm going to share your email here, and then I'm going to add mine as well. It's just Kate@Brand Pollinators. If you have any questions for Channing or I, please send them along. We also I can share a link to book a call with us if you want to talk with us individually, or sign up for our email list for sure, because that's when we have more events like this coming out, and we'll share that information with you. So again, thanks Dan so much for coming, and thank you all for attending and asking really good questions, and hopefully this was really valuable for you guys.
Everybody.